Guys, in my recent midweek update on June 9th, early morning June 9th, I told you that because everyone is bullish, so there are very heavy chances that the market manipulators will come into the picture and they will sell heavily and the market will collapse because the market was already in the consolidation and we were looking for a breakout. A possible breakout was supposed to be in favor of bulls, but because it was an excellent opportunity for the market manipulators, so I warned you, I told you that market manipulators may come into the picture and they will collapse the market. This was that midweek update on the early morning of June 9th. And because everyone is expecting that the breakout will be in the favor of bulls, this means that people are buying more and more. Okay, and this is the perfect situation, this is the perfect scenario, okay, for the market manipulators. Okay, they can pump a lot of money, means they can short sell, they can pump a lot of money in selling, and the market will all of a sudden will the market will collapse, the market will come down. In that case, okay, the people who were bullish, okay, they will lose a lot of money. Other than that, I gave you a midweek update on June 7th, and also on June 7th I warned you, I told you that because the technical indicators are changing sign from bulls to bears, particularly the stock RSI, and that is again the stock RSI is saying that the market may change its direction from bulls to bears anytime. Guys, this was that midweek update on early morning of June 7th, where I have shown you that how the stock RSI is changing its sign. Now, other than those two midweek updates, I in my previous technical analysis, okay, I gave you the support and resistance levels. Other than that, I told you that because the market has already consolidated, so in this week, means in the recent week, I told you that in the recent week market will either it will move up or it will come down because there was already a consolidation. So this was all about the movement of the market through the previous technical analysis and the midweek updates. Guys, as I mentioned earlier that my midweek updates are very important, and make sure that you do not miss these midweek updates because the technical analysis that I do on Saturday, okay, so a lot can happen between this Saturday and the next Friday, and that is why I am giving these the midweek updates so that I can guide you throughout the week, okay, through these the midweek updates, and I can tell you where the market is probably heading to. Now let's do the technical analysis for the coming week, that is for the week of June 13th, 2022. As usual, I will do this technical analysis in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way we will be able to get the most accurate results as we are getting for last many months. I'm going to begin with the weekly chart first. Okay guys, so we are here. This is the weekly chart. Let me write it down, the weekly chart. Okay, weekly chart means one candle represents 1 week, not 1 day or 1 hour or 1 month. One candle means 1 week. Let's first talk about the candle itself. So the interpretation of the candle. See, this is a very heavy bearish candle, very heavy bearish candle. Okay, and the low of the candle was the closing of the candle. This means that there are very heavy bearish sentiments. Okay, see, already the trend, it was the bearish trend. Okay, then there was a short-term retrace, and now again this candle is formed. So there are very heavy sentiments, bearish sentiments in the market, and we are expecting that the market will further come down to 3700. Okay. And if the market continues, okay, this particular trend, then most likely market will hit 3600 to 3500, okay, by the next month or by August 2022. Now let's do the technical analysis on the weekly chart. First comes the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed between the lower band and the median of the Bollinger Band. This means the market is bearish through the Bollinger Bands on the weekly chart. Okay. Then comes the moving averages. If you look into the moving averages, there is no crossover, there is no change in the pattern, there is a clear fan out in the moving averages, number one. Number two, market is continuously closing below the moving averages. This means the market is bearish through the moving averages on the weekly chart. Then comes the Ichimoku. Market has clearly closed below the Ichimoku cloud. This means the market is bearish through Ichimoku on the weekly chart. Then comes some other technical indicators. Now if you see that this is the MACD. MACD is moving average convergence divergence. In the last week, in the previous week, and also in the first 2 or 3 days of this week, the previous week, market was trying to converge. The MACD was giving the signals of convergence, okay, for the market. But thereafter, there were these two very heavy candles on Thursday and Friday because of the breakout in the market, and because of that, convergence that was happening. Okay, this convergence is now not happening, and the market is now regaining its divergence. So market is now going to diverge, means the market is coming down and the MACD will further diverge. Then comes the stock RSI. Now, if surprisingly, if you look into the stock RSI on the weekly chart, okay, because of this particular bull candle, because of this particular bull candle, okay, stock RSI changed its direction from bear to bull, and thereafter this small weekly candle for the week of 31st of May, okay, it further supported the bull movement, the short term bull movement, okay, and the stock RSI was up. But because of the breakout on Thursday in the market, okay, you can clearly see that now the stock RSI, the K channel and D channel, if you see the parameters, the K channel is 42.34 and the D channel is 31.83. Okay, so earlier the K channel was trading above 50. It was like 51 or 52 dot something. Okay, and the D was around 30 or 31. But now it has came down from 50 or 52 to 42. Okay, so this is clearly, so this is again indicating that market is not moving up. Secondly, okay, I have told you many times that until and unless market is, sorry, until and unless stock RSI, okay, the parameters of the stock RSI K and D are above 50, we cannot say that it is bullish. But as of now, you can clearly see that both K and D are less than 50. So this means that it is still bearish. And this is the same thing that I've told you last week also, that because both are still less than 50, this means that it is bearish. Okay, so the directional stock RSI is bullish, but the practical definition of the stock RSI says that market is bearish. Then comes the divergence indicator. Divergence, if you see that divergence is normal, divergence in the closing prices of the candles, okay, it is normal. Then comes the volatility. Volatility was 191.40 in the week of 23rd of May, and now it is 190.1. So now it is 191.10, okay, for the week of June 6th, and it is expected to increase further. And last week also I told you that volatility, it is not stable. Okay, volatility is still at the all time high levels in last 100 years of S&P 500 index. Anyways, through all of the technical indicators on the weekly chart, it is clear that market is bearish. Now let's move on to the daily chart to see what is expected to happen on Monday, Tuesday, Wednesday, etc. Okay, and we will deduce the probable movement of the market for the coming week. So let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Okay, this is the daily chart. So daily chart means one candle represents one day, not 1 week or 1 month or 1 hour. One candle means one day. Okay, now on this daily chart, let's first talk about the support and resistance level. So I have already written down these the support and resistance level. If you see that 4185 is going to act as the strong resistance for the market, because the market has already came down, okay, and the market has already closed below the moving averages. So this means that now the chances of seeing a retrace in the market is crossing the moving averages. So these chances are now very very low, and the chances of, and also the chances that the market will retrace and will hit 4185, these chances are again very very low. Then we have the 4035. Okay, it is again, so this 4035 is going to act as the immediate resistance for the market. Okay, means immediate strong resistance for the market. Thereafter some other resistance levels. Then we have the 3840. Okay, again, so this 3840, it is going to act as a strong support for the market, because earlier you can clearly see that the market, okay, it found some good support whenever it came around 3840. So it found support and then there was a bounce back. So again, market is expected to find some good support at 3840 or around 3840. After 3840, then comes the 3710. Okay, this is what I've told you many times, okay, in my previous technical analysis also, that whenever the market comes down and market hits 3710, chances are that market will retrace. So you can expect that if the market further comes down, okay, and if it breaches 3840 and all, then either at 3710 or around 3710, okay, whenever market comes into this particular range, market is expected to retrace. This retrace, okay, is most likely to happen when the market, okay, like on Monday and Tuesday, if the market continue to come down. Okay, if that happens, in that case, this retrace will most likely to happen around 3710. We will talk about this retrace and other levels, okay, when we will deduce the probable movement of the market. But let's first talk about the technical indicator. After 3710, we have 3630. Okay, it's a good support for the market. And after 3630, then we have 3565. So 3565 is very strong support for the market. So whenever the market comes and whenever the market hits 3565, okay, or around 3565, then most likely more than 90%, there is a more than 90% probability that the market will see a retrace, okay, in order to form a lower high. So that will be the 3565. So that's it. So I'm not expecting the market to cross or to breach 3565 in the coming week. So from 3565 to 4185. Now let's do the technical analysis. First comes the interpretation of the candle. If you see that this candle, the last candle, okay, the open of the candle is the high of the candle and the closing of the candle is the low of the candle. This means that the sentiments in the market are extremely bearish, not just bearish, but extremely bearish. This also indicates that on Monday, okay, you can expect a gap down open, or if the market opens, okay, you can expect that the market will further come down initially maybe for 15 minutes, maybe for 5 minutes, maybe for 1 hour. Okay, so this is most likely to happen on Monday. Now let's talk about the technical indicator. First comes the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed below the market has closed between the lower band and the median of the Bollinger Band. This means that the market is bearish through the Bollinger Bands on the daily chart. Okay, then comes the moving averages. Now this is the most interesting thing. Now if you see that the market has closed below the moving averages, okay, and also there is a fan out in the moving averages. Because of the fan out, because of the closing of the market below the moving averages, market is clearly bearish through the moving averages. Now the most important part, okay, in these the moving averages, and this is what I'm telling you for last many weeks, that whenever a slip is formed, okay, slip will be extremely dangerous. And if you can, and if you see, okay, there comes the slip, okay, this slip confirms that market is in the bear trend. Okay, this is a confirmation. Now there was a reason why this candle, okay, why there was a gap down open and why this candle, okay, it was formed in this way. The reason was the slip, because there was a slip in the market. Okay, see, number one, there was a breakout. Okay, that was one thing for sure. Then thereafter there was a slip. It was the 100% confirmation that now the market has lost all of its potential to move up in any manner. So market has to come down, and the market will come down on 10th of June. Then comes the Ichimoku cloud. If you look into the Ichimoku, market is closing below the Ichimoku cloud, market is trading below the Ichimoku cloud. This means the market is bearish. Now let's talk about some other technical indicators. First comes the MACD. If you see that MACD, okay, MACD was earlier trying to move up, and in my previous technical analysis I told you, it means in the last week technical analysis I told you that because, see, the MACD is moving average, convergence, divergence, and I told you that because MACD is trying to diverge, okay, means the difference between the MACD and the signal, okay, it was increasing. So I told you that because the MACD, the difference between the MACD and the signal is increasing, so most likely, okay, market may show you a few bearish candles, or the market may try to come down, or market first come down and then it will retrace, and then it may form a bullish hammer. Okay, and the reason was this, the particularly the divergence, because there was the divergence in the MACD. But because of the breakout on June 9th, okay, MACD has come down, and currently on June 10th, MACD is negative 29.61 and the signal is negative 32.22. This means that on Monday, whatever happens, MACD will for sure will change its direction. Okay, and the MACD will be bearish. Now comes the stock RSI, and this is where the magic happens. This is what I have told you through the midweek updates on June 7th and on June 9th, that because the stock RSI is now changing its sign from bulls to bears, okay, on June 7th and also on June 9th, that because the stock RSI, okay, the K channel is 84.11 and the D is 84.60. These are very close, but the K is less than D. And whenever such a situation, okay, that is seen in the market where the market is consolidating and the stock RSI is changing its sign, then most likely the breakout will be seen in the favor of bears, because the stock RSI is losing its value and the stock RSI is changing its sign. Anyways, as of now, stock RSI, it is clearly bearish. Okay, see, the directional stock RSI is bearish, and also if you look into the parameters, the K channel is 40.94 and the D channel is 65.77. Okay, so D is above 50 but the K is less than 40, but you need not to worry, because on Monday both K and D will be less than 50. So as of now, stock RSI is clearly bearish. Then comes the divergence. So divergence in the closing prices of the candles. Okay, so this is normal as of now because of the consolidation and in the last two candles. So divergence is normal. Then comes the volatility. Volatility that was earlier, okay, it was coming down. Now that volatility has started to move up, and the volatility is now increasing on the daily chart. Now through all of the technical indicators, on the daily chart, it is clear that the market is 100% bearish. Okay, so see, when I say 100% bearish, so this does not mean that you are not going to see the bull candles in between. Okay, market, so how the market works? Market always works like this. If it has to come down, then it will come down like this. If it has to move up, then it will move up like this. Okay, this means that intermittently, okay, you will see one or two bullish candles, but eventually the market will come down because the market is in the bear trend. Now let's deduce the probable movement of the market for the coming week. As you know that the market is 100% bearish, market is clearly bearish. Okay, and also as you know that there is a slip in the moving averages, but the significance of the slip is not just to tell you that the market is bullish or bearish, but to tell you that there will be more bearish candles than the bull candles. Now on Monday, because the market is heavily bearish on Monday, okay, irrespective of the open of the market is expected to come down. Initially it will try to hold here because of the confluence zone and because of our support at 3880. Okay, thereafter it will come down and it will then hold around 3840, that I've told you that this is our support. But I'm not saying that there will be a bearish candle. Okay, I'm saying that the market will come down. Okay, and because the market has already came down a lot in last 2 days, when the market come down, okay, and if it hits either this level or this level or this level, and if there will be very heavy sentiments, then it may come down to 3710. So initially after coming down, the market has to retrace. Okay, the reason is that it has already came down a lot, and this is not how the market works. So initially it will come down, and then intraday, there will be a retrace in the market, either the hammer, okay, or the doji candle or a small bearish candle. Okay, it is expected to form on Monday. Other than that, okay, if the market closes around this point, okay, around this price 3840, then on Tuesday you can further expect the market to come down. Other than that, see, after the closing of the market on Monday, okay, if it's a bull hammer, in that case the market will move up. You know that the bullish hammer means that initially the market will move up on the subsequent day. Okay, it will never give you a guarantee that there will be a bull candle, but it only says that the market will move up on the next subsequent day, maybe for 1 hour or for the 15 minutes, and thereafter it may come down, okay, or it may form a short bullish candle, but the market won't move much. Okay, now comes the Tuesday. So if the market closes around 3840, then on Tuesday also, okay, it is expected to further come down. Okay, because the trend is bearish. So on Tuesday again the market can come down and it can form a bearish candle, then on Wednesday and so. See, the thing is that until and unless you see that the market is coming down to 3710, okay, we cannot say that market will retrace. Momentarily you can say that intraday market is retracing, then it is coming down, retracing, then it is coming down, and so. Okay, but when the market comes down on and it hits 3710, then only we can say that now the market will retrace, because 3710 is very strong support. And see, not just 3710, but the zone around 3710, so like plus minus 10 points, okay, plus minus 15 points or plus minus 5 points. So this is one thing. Now the other thing is that because the market has came down a lot, market has almost collapsed, okay, because of the breakout. If on Monday, if the market again forms a bear candle, in that case you can apply a fib retracement, considering this is the high, okay, and then you can apply a fib retracement to the closing of the candle. And if you see that the closing of the candle is here, in that case, so if the market closes around this 3840, and if you apply the fib retracement, then you can expect that the market will retrace at least up to this level, and thereafter we have other levels, okay. But if the market closes below the 3840 on Monday, like this level, this particular level, okay, in that case you can say that the market will retrace to particularly to this level, and thereafter we have, we have these other levels. So you can use the fib retracement not for the purpose of buying, rather the purpose of selling. The fib retracement will simply tell you that after hitting what particular price, the market will come down, the market will collapse. So you must be ready to sell whenever you use the fib retracement. Use the fib retracement to see that what prices will be there, or what points will be there to give you the chance to enter into the market in order to sell. So what I advise is to look for the lower high. So you must always look for a lower high. Whenever the market is coming down, you must always look for a lower high, just like this one, okay. So when you see that there is a lower high, the market is moving up, there is a lower high, in that case sell, and the market will come down, as simple as that. And guys, also remember that whenever market moves up, this 4035 will act as a very strong resistance for the market. After 4035 we will be having the 4065, okay, and after 4065 we have this level, this is 4110, but market is not expected to retrace up to 4110. Market can retrace up to at max up to 4035, where the lower high is expected to form, and when the lower high will form, then you can sell, because the market is bearish, okay. So see, whatever happens, I advise you not to buy, rather wait for the market to form a lower high, and whenever the market forms a lower high, then enter into the market, okay. You can sell, you can short sell, or you can buy the put options. Guys, if you want to make 40% returns through options trading, then you can join my Discord group. I have given the link related to the Discord group, the spreadsheet, and the YouTube video in the description of the video. You can take a look, and whenever you are ready to join the group, simply drop me an email. Also guys, do not forget to subscribe the channel in order to get the weekly technical analysis, and also the midweek updates that are very crucial. And when you subscribe the channel, then make sure you also click on the bell notification icon, so that whenever I upload a video, you will get an instant notification.